So what's wrong with business investment anyway? This is a question that seems like a common sense answer, but it's at the heart of this reconciliation bill. Joining us now to talk about it, we have Senator Mike Crapo of Idaho. He's the ranking member of the Senate Finance Committee. Senator Crapo, sir, it's wonderful to see you. We appreciate it.
Yes.
You're maybe one of the few people that can explain it. So look, there's a difference between IRS profits and book profits. And as I understand it, I've been trying to say this, in 2017, you were a leader on this. The tax cuts, the Trump tax cuts, the corporate tax cuts, wanted to encourage people to invest in new plants and equipments and that sort of thing, because it was good for wages, it was good for job creation, it was good for working families, et cetera, et cetera. Now, what's wrong with that? I don't understand. If someone has a lower IRS tax rate, we knew this was going to happen. Why is this such a bad thing that has to be zeroed out?
Well, you just hit the nail on the head, Larry. It's not a bad thing. It's exactly what was intended to happen with the 2017 Tax Act. And in fact, it did happen. Recall back then that we were facing capital fleeing from the United States. And we saw a really weak economy. When we incentivized capital to come back to the United States, over $1 trillion in capital that was being held offshores came back to the United States. And we started seeing an investment in the kinds of growth in many areas, particularly manufacturing, that is so critical to making our economy stronger again. You remember how strong the economy got in just a couple of years when that money came back to the United States and capital investment increased in the United States. And these taxes will slam that very dynamic. In fact, as you know, we just got two analyses from the Joint Tax Committee, a bipartisan committee that analyzes these dynamics. One of them said, where will this fall? And the other one said, who will pay the burden of these taxes? The first one said that the burden will fall mostly, 49%, on the manufacturing in the United States. It will still hit all other segments of the economy. The second one said that this will fall through to the lower and middle income classes primarily. Just a couple more statistics. It said in the first year of these new taxes, $17 billion will be paid by people making less than $200,000 a year. And by the end of year 10 of these new taxes, for at least 50 to let's say 1/2 to 2/3 of the entire burden of these tax increases will fall on people making less than $400,000. Mm-hmm. And of course, that number is critical because that's what President Biden said he would not do.
That's the part that the defenders of this reconciliation will not talk about. So can I go back? So we wanted people to invest in new businesses,
right,
new equipment, new plants, whatever. And that's deductible in year one. So if you have a lower average tax rate for a year or two, what's the big deal? That's the part. This is by design, legal. It's not a loophole. It's something very productive. As you said, by the way, it includes the effort to onshore. That's a very important point you just made, sir. I mean, I don't understand why this is so scandalous. I know the left, the woke left, the Biden left, they hate profits anyway. So if you could tax profits at 98%, they'd want to have a tax at 100. But for normal people, men and women owning and working in business, why is this so bad?
Well, people across this country understand that it's not so bad. They realize that these aren't loopholes. This is exactly what Congress intended with the research and development and production tax credits and deductions that was authorized by Congress for this very purpose. It grew the economy, it grew wages, it increased employment, and it made our economy much stronger with the kind of capital investment that makes us more competitive against China and against Russian activities and other malign activities from nations across the world trying to steal our markets. And the notion that these are tax loopholes is absolutely false. This is exactly what was intended to happen. It is happening, and it is having the impact that it should have. And frankly, if these go ahead.
No, sir. I don't want to interrupt. You're on a complete roll. Please, you finish.
I was going to say, if these taxes are passed, then what we will see is not only that the burden will be carried by far by those making less than $400,000 today, but it will result in higher inflation, more stagnation of our economic growth, lower wages, less employment, and most importantly, as I said, the burden will be paid by people making less than $400,000.
You know, I was just going to say, Senator, that I've never met a CEO, a CFO. I've never met a business executive. I don't care, left, right, Democrat, Republican, who didn't favor R&D credits. Okay? What this bill says is you can't do that, or you're going to have to cut back on that. I mean, everybody wants that. That's why I just don't understand why this is A, a loophole, or B, evil, or C, something that has to be ended. I mean, there's like broad, widespread agreement on expensing equipment and various R&D tax credits. I mean, it's just to me, this is the cutting edge of this whole debate. Is this point, because it raises over $300 billion, which it won't. You know full well that if you tax something, you're going to get less of it. But I mean, this is the fulcrum of this whole debate? And if you could beat this thing down, maybe somebody would listen. Maybe.
Well, we're trying, and we appreciate you helping us get the message out. But the bottom line is exactly as you said. The Democrats are going to utilize these taxes in order to justify a phenomenal amount, hundreds and hundreds of billions of new spending. And by the way, we're talking about this book tax or this corporate minimum tax, but there is another specific tax in here that is directly on our oil and gas production. Oh. At a time when the president has already shut down American production as much as he can, and gas prices are skyrocketing, they're talking about piling another tax on the oil and gas industry. It is just, it's inexplicable. But the way you explain it is, their drive for more spending is causing them to ignore all of these arguments because it's the only way that they can get to where they can justify the new spending.
And, you know, sir, last I looked, we got to end, but it's so much fun talking to you. You should come on more often, Senator Crapo.
I'll do that.
Last I looked, revenues, tax revenues as a share of GDP was around 20%, which I think is some kind of historical, interplanetary, intercontinental high. And they want even more revenues. That's the most incredible thing of all. Anyway, more to be revealed.
That's right. And by the way, let me just say, Larry, you're right. We used to hover around 17 to 18%.
Yeah.
Now it's up over 20%. And the fact is, the reason it's up so high is because of the tax relief that we provided in 2017 that generated so much economic growth in the United States that generated more revenues in taxes for the Treasury.
Yes, sir. Senator Mike Crapo, I hope you'll come back, sir. We need you.
I'll do it.
All right, take care.